Welcome back, guys. It's Jason with your Hopium Free Crypto Update. Today we're looking at Bitcoin's price analysis for October. We've got some institutional money inflowing into the markets, even though the markets are dropping. I'm also going to look at Cardano price analysis as the price is getting closer to that $2 level. We've got the metaverse is growing, so we've got some crypto news, how to get paid with your cryptocurrency, some news coming up, and also the real estate boom ahead. Just a little piece on the overall markets as some guys have been asking about the cycle. All right, guys, you know what to do. Hit the like button, subscribe to the channel, bell notification icon so you can see that the content pops up on your mobile phones, time-sensitive information here. All right, let's dive into Bitcoin. Now, I got the weekly chart up here. We are looking at Coinbase. I'm only going to go back a few years. Now, you probably noticed, obviously, the title. October might not be bullish for Bitcoin. What the hell are you talking about? I've been talking about a Q4 bullish, things to go crazy for cryptocurrency. But October, which is my purple boxes here, is potentially the month that is still waiting or just starting to push to the upside. So that's all I'm looking at here. I wanted to go back in my analysis this morning as I was reviewing my charts and have a look at how long do I have to wait until I get the exciting times like we saw at the end of 2020, like we saw at the end of 2017, those sort of periods. When does that actually happen? And if you've been following the channel, you know that I love to look at timeframes and we look at it to see how long should or could these moves last. And this goes for many markets. And so sometimes or often it's only several weeks out of the entire pattern. So out of this period, you've got from that October period to the top was about 8 weeks, so about 2 months. That was to the 20 grand top. And I'm picking that low because that's as we began to break out. So when I look at that, that's a 100% move there from the 10 grand to the 20 grand, 100%. Now the next move is also exciting, but it's far more exciting because more people are in the market and they're expecting big things. But the move is exactly the same. You got another 100% to those levels from 20 grand to 40 grand, 42 grand, give or take a little bit here. But the excitement in the market is so much more. And then that leads on and spurs on even more people to get into the market. But the returns are either similar or they start to lag. So we've got about another 100% from those lows in January into the highs in about April. So about 100, just a touch over 100. But from experience now, or hopefully some of you have lived through it to have that experience, that the markets, most people are getting in closer to the top. So you can see the volume up here, the retail is getting in, and then the returns are just far, far less. 20, 30, 40, sometimes 50% into the highs. So I'm looking at the patience. How can I prepare myself in case October isn't the blow-off month and we have to wait till November or December? Because I still think Q4 is going to show some really big price action. It's going to have something going on, whether it's price action to the up or the down. I think something happens in Q4 because I've seen it time and time again. So if I just look at 2020, I've got October, and this was the month that started to break out of the previous tops that were set in August. So that was the breakout month. And then we had November into December, which got a little top. And then it took off in January. And the rest is history from that point. So November was a little more exciting because it started to get more volume into it. What happened in 2019? This was October in the purple box. And then November had the spill. So there was still some excitement. There was still emotion in the market for what I can see here. And I remember being in the market. This was kind of like, what the hell's going on? We thought it was going to $20,000 or a $50,000 Bitcoin by the end of 2019 because we had such a big explosion already. And it didn't. It spilled over. 2018, November was another spillover month into December. So October was the kind of the wind up waiting for the action to happen. But the rest of that quarter just spilled over. We had all the excitement and, well, no one's really excited when the price crashes 50%, but people were panicking. There was fear. There was emotion in the market. I'm looking for high emotional times in the market because that's when most of the money is made. You want to be in the market before that emotion comes and then hold on for that ride. The ride, going to the moon, whatever else people want to rave on about, that's the emotion that they're looking for. So I want to get in before that emotion, which I think is the time that is now, that sort of September period that we've seen the crashes, and then have the patience to hold out for that excitement. If I go back to 2017, we had September as a low, and then October started to break those highs that were set in August, which is kind of similar to what we're seeing now. October started to push up, but then the real excitement, everyone started to come to the market in November and December when it was too late. They were only getting about sort of that $8,000 or $10,000 Bitcoin into the 20,000 if they happen to sell the exact top, which of course we know from history most of us don't do, and nor are we looking to do that exact point either. So the November-December period was the excitement, the energy is coming to the market. Let's go back a little bit further. Let's have a look at 2016. It started to break out of the September top that was set here. August, July was the spillover, the pause, the top, and then October started to break out. And then we got November and December into this peak that happened late December, early January. We go back to 2015, the last one here. So we had the lows in August, a little bit of a tiny peak in September, market went quiet, then October started and we started to take off from that point. And then the peak came in November, possibly late October, early November, and then the market continued to run into December before it peaked out just a little below that previous top, and then the rest is history again, the wind up and then the move again. So I don't expect the entire Q3 to be one upwards trajectory to the moon. And I'm just taking it back a few steps and thinking, I do think there'll be some sort of move in Q4 because it's what I've seen in the past, but I don't expect it to be every single day of that 90-day period. And I'm just looking for other similarities in history to represent what could happen in the future. So at this point, I'm thinking that November, December seems to be a pretty good candidate for when the big moves or the big excitement will happen. Because like we can see for 2020, there was still a big move from October in 2020 to the end of October, going from around that 10 or 11K to about 14, 15K. So it's still a reasonable percentage return. But then the next move that happened, going from 15 to 20, percentage isn't as big, but the excitement's there. Now onto ADA, and it has continued to work its way back down to $2. Currently the low is right on $2. So I'm on Binance here, and yesterday's price came in at $2.006. So call it $2. We did see this big volume bar that peaked out and came back, and we've now closed in that entire bar. But the main thing I was looking at here was for the lows to hold, for some sort of support to come in. I think we would possibly see that $1.80 level, and I've just moved my next 50% level, just like moving averages would move as well, from the major low to the current all-time high, which brings us out as around $1.60. So the levels for a range that I'm comfortable with is that sort of 150, 160 up to where we are at the old all-time high, that 250 for a consolidation move. All right. Obviously, if we break down further, then I think things have got a lot further to go. Ideally, I reckon 180 would be a nice comfortable level. Down here, sort of between the 150 and 180 just gets a little bit too close for my comfort. But the 180 level to where we are at that 250 is kind of where the market is telling us it wants to grind out for now. So the downward grind for ADA has slowed. That's exactly what we were looking for. The trend that was put in from the top finally broke out, and now again what we were talking about, the breakout and then the slow of the bleed. I'll make a mention, if you guys are staking your ADA or looking to stake your ADA, you can check out the link down below in the description or in the pinned comment in the comment section to stake your ADA with the Investor Accelerator pool. Check it out down below, get passive income on your Cardano. Now on to the news, and we're looking at the Digital Asset Fund Flows Weekly, so volume 48, week ending 24th September. Covered this briefly yesterday, just looking at the 6 weeks of positive funds coming into the space. We haven't seen too much come out in the previous 6 weeks to that, and then the following sort of 6 to 8 weeks before that. The overall money coming in is far more than the money going out, exactly what we want to see, and especially in these times, we're seeing more money come in. As we can see from Bitcoin last week, 50 million, ETH nearly 29 million, Solana nearly 4, Cardano 2.5, and Polkadot 2.5, which leads their totals to about 35.5 billion for Bitcoin. So money is still coming into the space, and especially on those weeks where the market was down, we saw big money still coming in. gives you a little more confidence to think that there is some more big money coming into the space and blowing up the cryptoverse when the time is right. So Cardano is currently at around 81 million. You know, it could just be me hoping and dreaming, but when you got money coming in when the market's going down, that's the times that I like to be buying. Cardano is also investing into the DeFi, NFT, and blockchain education space. So this has probably been covered a few times as it was announced during the Cardano Summit on the weekend. Just wanted to recap some of the Cardano news, especially as I cover a lot of the price analysis for ADA. More news, and this one is from Facebook. This has come out yesterday, a day and a half ago, building the metaverse responsibly, whatever that means, from Facebook. But we all know NFTs are massive. I think the metaverses are going to be big, and that's kind of a space that I'm far more interested in, as I like land, I like property, I understand those sort of cycles. And if you're looking for something to invest in, but you just don't understand the JPEGs and the NFTs that are just going crazy like that, maybe start to think about some of the spaces or the exchanges that are looking at NFTs in general. So they're kind of like the gas stations where you go to fill up and you got to pay a little bit of a ticket price to get these NFTs. Or in this case, you're looking at land, just like everyday buying real estate. If you own some of that real estate and people want to build on that space, that might be a bit more of a opportunity to get into the NFT space. So the metaverses, what is the metaverse? The metaverse is a set of virtual spaces where you can create and explore with other people who aren't in the same physical space as you. So essentially building and growing in a digital world. Now, how can you get paid with cryptocurrency? Coinbase is releasing or working on rolling out the ability for customers in the US to deposit their paychecks into Coinbase to more easily make regular crypto trades, spend on Coinbase card, earn crypto rewards, and more. Get paid in crypto or in US dollars and deposit as much or as little of your paycheck as you want. That is just removing the barrier of transferring your money from a bank to an exchange and just saying, hey, drop all of your money into the exchange itself. If that's not bullish, I don't know what is. Just an easier route for money to come into the space. Speaking of money going into the space and coming out of it, of course, I'm looking at today's sponsor, and that is Social Good. Thanks to today's sponsor, Social Good. It's an app where you can get 100% crypto back on everyday shopping. So you can shop up to about $10,000 practically for free using the Social Good app at shops like eBay, Best Buy, and Trip.com. On the Social Good website, you can see there are 3 steps to shop practically for free. The first is use the Social Good app to purchase the goods that you want. The second is to receive the Social Good token back. And then to get it for free, you have to sell that token on the exchanges which are listed here. So they're on Uniswap, Bitmart, Bittrex, and you can find more information on CoinMarketCap and CoinGecko. There is also staking coming soon up to 15% per annum. Taking a look at the price chart of Social Good, which is the SG token, you can see that the Bitcoin value has been in a downward trend and the USD value is also in a downward trend. It's down about 80% from its all-time highs set back in January of this year, and the market cap's around $850,000 at the time of this recording. Remember, this has a firm downward pressure on it as it is a token that you need to sell in order to get your products for free. So keep that in mind. This is not a buy recommendation. And if you are interested in tokens like this, which are community focused, definitely do your own research on these sorts of tokens and their tokenomics. Thanks once again to the sponsor of the video, Social Good. The links will be in the description to find out more about Social Good. Now, if you're interested in learning more about cryptocurrency, stocks, and real estate, we're looking at the real estate cycle as well, which all ties in to your investment journey, your long-term successful investment journey. Check out the free Investors Insider newsletter. The link to that is down below in the description. It comes out once every 2 weeks. My brother and I put it together, and it's full of cryptocurrency and real estate content like this. And this is looking at the real estate crash, which we think is unlikely based on the 18.6 year cycle, which has been going for over 220 years. But we do estimate that there'll probably be some sort of crash coming after 2026, leading up into a crazy peak at that point in time. Now, you've heard me talk about the books on the channel before, but if you're interested in more of this, check out the link down below and subscribe to the free newsletter. If you don't like it after any period of time, you can always just unsubscribe. It's a very free, risk-free investment. That's all I got for you guys today from the new studio setup. I hope you enjoyed it. Hit the like, subscribes, and the shares down below. I'll catch you on Instagram, Twitter, comment section, or on Patreon. Links are in the description. Until next time, have more fun to get more done.